What's up, Disruptors? This is Mike Satoshi with Sharing in the Disruption podcast, where we level the playing field by helping you understand the exponential changes going on in the world of tech and investing. So today, I've got the CNBC Disruptor 50. They publish a list every year on the top 50 disruptive companies that are being looked at. And most of these, I think most of them have to be private companies, or they just happen to be. So obviously, I don't have probably enough time to go through every single one of them. And I will, if you subscribe to the newsletter, I will be publishing a custom chart I made that I took all these companies and I broke them down kind of into what they best fit into as far as categories, whether it was fintech or medical, bio research, AI or whatever, cybersecurity. And I kind of made a pie chart so that you can see which sectors are really getting the most attention this year and as seen as the most disruptive. I'll tell you, fintech's at the top of it. Financial technology, and there's even some crypto companies in that space on that list. But you can kind of see what the trends are. And like, for example, on the list, one of the segments that gets the least attention and only has one company in the Disruptor 50 is a space company. But, if you're paying attention to the stock market and all this, space companies get a disproportional amount of attention. I would say like something like Virgin Galactic is going to get a ton more attention than a fintech company. But there's way more fintech companies that are in the Disruptive 50. Now, you may not like CNBC because it's more mainstream. And actually, in subsequent podcasts, I'm going to be covering other disruptor lists, like one published through Andreessen Horowitz. That's a venture capital group, and then one through another group on marketplaces. So I think all this stuff is really interesting. So what I have is all these disruptor companies lined up right now, and I'm going to go through them one by one. I didn't have enough time to thoroughly analyze every single company. Some of these companies are brand new to me. A lot of them I am very familiar with. So I can add a lot to that conversation. With each company, I also want to look at a few different elements because they're private, to delve more into it, and there's not as much information on record. One thing I like to look at is the Glassdoor to see how people like the CEO, kind of what the ratings are of that company and how people really like interacting with that business. Another thing I'm going to be doing is maybe pulling up in Google News, just typing in the company and seeing what some of the most recent news that's been associated with that, and is it positive or is it negative? So the first disruptor company, I'll actually read through this whole list real quick, just to get started, just so you kind of know what to expect. All right. So here's the background to the Disruptor 50. This is from a CNBC site, and it's loading for a second. It says, in the 9th annual Disruptor 50 list, CNBC highlights the private companies leading out of the pandemic with business models and growth rates aligned with a rapid pace of technological change. And I will say, from looking at some of these companies, it's crazy. Like, a lot of these disruptive companies really have custom business models spun out of the pandemic. And some of them are directly addressing some of the issues we noticed. Like, for example, one company is making a health verifier app that you can use to get into sports events and all this different stuff. Investors have taken notice that the companies on the 2021 Disruptor 50 list have become critical players in fundamental economic and consumer transformations. A majority of the CNBC Disruptor 50 are already billion-dollar businesses. So these aren't tiny businesses by any means. 34 disruptors are unicorns that have already reached or passed, in some cases far surpassed, the 1 billion valuation mark, 10 of the companies on this year's list are worth at least 10 billion. So these might as well be public companies. So just because they're private doesn't mean they're tiny. And some private companies are bigger than public companies. The 50 companies selected using the proprietary Disruptor 50 methodology have raised over $72 billion in venture capital, according to PitchBook, at an implied Disruptor 50 valuation of more than $388 billion. So almost $500 billion. While technologies including AI, 5G, cloud computing, and the Internet of Things are key to many companies making the 2021 Disruptor 50 list, the sectors they are upending are widespread, from financial services to healthcare, biotech, education, food, media, agriculture, and transportation. So I made this chart. The chart that I'm going to publish in my newsletter, I'll go ahead and tell you what the categories are that I broke these down into, and which categories scored the highest as far as amounts of companies in that sector. So in the lead, we have fintech, financial technology. That's any payments. That includes some blockchain companies, anything dealing with digital processing payments. There was 11 companies in that space. Within the next one, coming in at number 2, is healthcare with 9 companies. And that makes sense coming out of pandemic. Some of these range from more kind of like genomics companies, very niche medicines, to marketplaces of healthcare. So it very much varies. Number 3, I have this kind of broken down into, this maybe could have been various categories, but number 3 is 7 companies within the green tech / healthy food space. And, healthy food can be argued to be good for the environment because it uses less cattle, which produce pollution. There's companies in there that do recycling, new bioplastics. There's green technology, electric, like batteries, all that kind of stuff is all grouped within that category. So like I said, I didn't want to get crazy with all the categories. So I kind of grouped all that together. Some sustainable agriculture companies are within that space. The next one is a tie. Each of these has 5 companies. And this is logistics, so any type of shipping. And I put one that could have been in the green tech space in the logistics category because it was a green logistics, but I felt like it fit better in logistics. And then there's social / this is another one that could have been multiple categories, but social media / communication / creator economy. That's another, and that has 5 companies within it. The next one is e-commerce, which has 4. Next one after that is a tie between SaaS, software as a service, kind of cloud software companies. And 3 is cybersecurity. The next one is education, which has 2 companies within it. And then one is space. Like I said, space gets tons of attention, but there's probably a lot of space companies out there. They just didn't view them maybe as disruptive. But as far as total companies go, like there aren't that many space companies comparatively. So it seems very much weighted towards some of the less sexy stuff like finances and healthcare. I mean, I think that's cool. Like we all need good healthcare. I wish there was more education companies, honestly, to be like higher up because I feel education is so important. And all of these categories are worthless if we don't have good education and bringing up good educated people to advance all these things. So education is fundamental. And I think education and healthcare, I say this over and over, are the 2 most lacking things. and probably areas that get too little financing, unless, healthcare can get lots of money into it where they see like huge profits and stuff, but there's a lot of prices could go way down in education and healthcare, and we'd have a better society. All right, I will get off my soapbox and go back to slowly going through some of these. So, I was going to go just read the companies real quick. All right, so coming in at number 1 is Robinhood, and we all know Robinhood is maybe from the GameStop thing and onboarding a lot of new investors, be it very inexperienced, but Robinhood is like one of the ways I got on and started investing. It's really easy to use, and I would say these platforms serve a huge purpose because, like, they'll get people on, like Robinhood or Stash or Cash App or Acorns, like where it just automates and takes a portion of like your like money you spend, rounds it up and puts that into savings. All of these things are like a good onboarding to get people to take more charge of their money. Whereas like most people only would invest in the past, unless you were like a trader or really good at investing and had like a Fidelity account, all this kind of stuff. It just wasn't bringing in the masses. And most people would invest through their company 401ks or some type of retirement plan through their company. And as a lot of businesses don't even have some of these things anymore, especially these gig working things, I think it's really important for people to take charge of their finances. And honestly, I couldn't wait to get out of the last company I was in and pull my money out that was actually like not doing that well because they had such a limited amount of funds to invest in, and put that into things that I knew would do better. I mean, or things I was at least more passionate about. You never know what's going to happen. But I actually wanted to take on more risk than the very safe things my company kind of had prepackaged. And, they just had all these prepackaged like index funds, mutual funds, and bond packages, which young people, in my opinion, shouldn't be investing in bonds. You want to take a little more risk. You got time, and you want to have some exposure to some risk because you have time to get it back. So I think these companies serve a big purpose. And then eventually, once you really get your financial skills up to, like, if you really like decide you love this stuff, you might even move off of these platforms and find better things to get into. But it at least gets you into it, and then you can decide the level of engagement you want to have. So we got Robinhood, we got Stripe, Discord, Sentinel One, DD Chuxing, Brex, Marqeta, Chime, TytoCare, Elevate Bio, K Health, Convoy, Checkout.com, Indigo Ag, Snike, these have some interesting names, Tempus, Lineage Logistics, Gojek, Clear, Tala, Flutterwave, Thrasio, Relativity Space, Impossible Foods, Amp Robotics, Natira, Cockroach Labs, City Block Health, Udacity, Appeal, Site Diagnostics, Cyber Reason, Clubhouse, Stila Nanotechnologies, Bestow, GoPuff, Databricks, Ripple. Ripple is a crypto company, actually being investigated by the SEC right now. Plaid, that was a company that was Visa was trying to buy. Nubank, Flexport, Flock Freight, Eat. I think that's backwards. It says Eat Just, but it's just Eat. The Movandi, Footprint, Airtable, Block Power, Patreon, Guild Education, and Heal. Now, I do not have every one of these companies pulled up on my computer. If you want to look this up later, I have 20 of them that we'll go through because I think that will probably take up a good amount of time. So there's a few I might add to that. Like I might go through separately, like Patreon and a few different ones that I know a lot of people know of, Ripple, Plaid. So I might add a few to that list, but I'm going to start going through these and we can discuss them. And some of these, like I said, I haven't had time to go through every single one of these, and I'll pull it up on the website and we'll discuss like what they do. So the first one is Robinhood. And we all know what they do for the most part. And we know that there's been some issues. They make lots of money. They make a lot of their money through, this is one I do know lots about. It was exposed during the GameStop fiasco that they make their money through, like when I started investing, I was like, how do they do this for free? Because like before that, like all these different exchanges, you would have to pay a fee to buy stock. And it's seemingly free on Robinhood. You don't have to buy a certain amount. You don't have to buy a whole share. You can buy fractional shares. You can buy like $1 or something. Like it's crazy. And the way they do that, because they have to make money and they make lots of money, is through something called payment for order flow, which was actually pioneered by, from what I heard, Bernie Madoff. It was like one of the more legit ways that he made money, because he did have a career besides the Ponzi scheme. So what that is it somehow, like when you place an order, it goes through Citadel or one of these other like brokers, and they're able to eke like small amounts of money out of each transaction. I guess like betting, I can't fully explain it, but it's kind of this sneaky way. You're not getting a stock for the very best price you can get it, meaning you can get stocks for cheaper other places, but it's so minuscule. It's actually not that bad a deal for a consumer, in my opinion. But some people don't like that your data's essentially being sold around, and kind of somebody's like front running orders behind the scenes. And Robinhood's just kind of selling out your data like Google does for ads. And that was kind of exposed, and then these weaknesses in the system that kind of caused all these things to freeze, and motives were in question. And ultimately, I think most of the financial investing industry is kind of like, a lot of them work on this. Like Robinhood got a lot of heat, but there was a lot of other exchanges that went down. So it's not just them. I think it is kind of unfair to just like target them, because this is kind of how it's done now. But it just was really bad with them. I hope eventually the markets are able to move to blockchain or some like more modern way. Like it's kind of an archaic system from my understanding how all this is done, and it's more rooted in almost like the way paper stocks were traded around, and there's just too many like hands in the cookie jar. And like the fact that you can short more than 100% of a stock, the fact that there is possible to have multiple shares of the same stock out there, and there's just all this like funny business that really couldn't happen on like the blockchain if they were able to make it. Not to mention like having the markets close and open, and I can trade crypto and it's 24 hours a day. It's amazing. But they make lots of money, and they've also built out a suite of financial services. They have a debit card. The biggest thing I think is Robinhood's risk factor. In my opinion, I don't think they should mess around with options, puts and calls and options. Like they have like Robinhood Gold, and you can get all those options. I don't know. Like, I feel like that's a risky thing. And they just, I feel like they should more stick to just having stocks. Like, it's just I don't know. It just exposes them more. I mean, it makes them a lot more money. They make a lot of money off the options and the all these expanded services they do. The biggest thing is margin. People being able to borrow money and buy stocks with. So I mean, you hear all these crazy stories of people. That one guy that killed himself. That's a huge liability. I think I forgot how much it said. It showed up on his phone saying he owed like hundreds of thousands of dollars. He was like 18 years old or something. It was like really tragic. And I think he walked down from a train or something. But and then it turned out it was like an error. But I mean, people actually do, even on some of these like forums like Reddit, they like brag about how much money they're losing, or it's kind of like a sign of um, how committed you are or something. Like, it's just, I just like hate the idea of people having that much debt early in their life and they don't really understand what they're doing. But I am also like an advocate of, people should be able to do what they want. And like, people buy lottery tickets but I guess the margin is just like, yeah, you should be able to buy stocks, but like to borrow like an insane amount of money, like 1 to 100 leverage or something, like, I don't know. I do feel like you can draw a line somewhere. As much as I want to be libertarian about it, like, I don't know. Like, I don't feel like there's a great answer, but um, you want as much freedom as possible. You do want to err on that side, but you also don't want people to just get screwed. And some of this stuff can do it, and they at least need to be made aware of the level of risk they're taking on, and not like, it's easy for people to think about the degree of the upside without thinking the degree of the downside. And maybe they say like, hey, this is how much you could lose, as along with how much you could gain. So who knows? But I'm just trying to bring up, I'm not trying to have an ethical discussion really about Robinhood, but more bring up liabilities if you're ever going to invest in Robinhood. And they're about to come public as a stock. And it's probably one of those things that better wait a little bit out the gate, because it'll probably spike and then go back down as people can sell their shares. So what are some of the other things they have besides their stock app? Because the way these companies work, they build up an app and then they kind of expand out from it. And so, they have the stocks and the funds. They do options, options trading. They have Robinhood Gold, which I think just allows you to get a lot more leverage and borrow money and do some of the options trading. No. Options are with the free plan, but the Gold allows you to get margin. Um, and that's one of the good ways they get money. So they love that. So they're not going to get rid of it anytime soon. They have cash management, which they have an interest-paying account. So that's another thing they've developed. They have cryptocurrencies, which I actually don't recommend buying cryptocurrencies from Robinhood, because you don't actually own your crypto, whereas you do with Coinbase and Square and independent wallet. But I had some Ethereum and Bitcoin on Robinhood, and once I realized that, I pulled it out, and I actually had to completely cash it out to move it. You can't move it on chain into any other thing. So I do not recommend. They brag about having like no fees and stuff, but part of the fees with Coinbase, people, bitch about the fees on Coinbase, but part of the fees of Coinbase are storing it in a cold wallet for you. And you do actually own it, so you can transfer it to a Coinbase wallet or MetaMask or any of these different wallets, and you have custody of it, and you can store it on hardware, cold wallet, cold storage. Uh, let's see, they have some lessons on investing, and yeah. So I mean, that is what it is, and they're going to continue like developing new services around Robinhood. They're so, I mean, they're going to mitigate a lot of that risk by just branching out into more and more services. So even though people have strong opinions about them, like I don't think they're going anywhere. And you know, investing in them, you probably make lots of money. So you may not like them, but I think they're going to do well. But you know, I'd know some things, know your risk, and I really wouldn't invest crypto with them. Let's see, next company is Stripe. Now this is this is a company most people don't know because they interact with it without knowing they interact with it. Like people interact with this company on a daily basis. It's almost in every financial transaction. And they have turned into just a massive company, and people don't even hardly know about them, unless you're in, the tech space. Then you know all about them. So they are payment infrastructure for the internet. They just integrate all of these different things. I know they do like Uber's payments, and they are just able to connect all these different apps and integrate everything together. That and Plaid are some of the biggest companies in the space. Let's see, millions of companies of all sizes, from startups to Fortune 500s, use Stripe software and APIs to accept payments, send payouts, and manage their businesses online. So let's see, what products do they have? They have payments, which is online payments. Let's see. So companies, they have a complete payments platform engineered for growth, accept payments and move money globally with Stripe's powerful APIs, software solutions designed to help you capture more revenue. So they have payments for any business, from e-commerce stores to subscription businesses to platforms and marketplaces. They have a complete stack of payments needed across all channels. Let's see. Some of their customers are some of the biggest companies in the world: Amazon, Booking.com, DocuSign, Instacart, UNICEF, Google, Shopify, Peloton. So, I mean, they're like the plumbing that connects everything together. They have terminals or in-person payments. That's hardware. Let's see. Extend Stripe payments to your point of sale. Stripe Terminal enables you to build your own in-person checkout to accept payments in the physical world. Built with platforms and modern retailers in mind, Terminal helps you unify your online and offline channels with flexible developer tools, pre-certified card readers, and cloud-based hardware management. Some customers they have, and they don't necessarily compete completely with other point of sale, but they help some point of sale integrate. Let's see. You can manage all your online and offline sales in one place with a single Stripe integration, simplifying reporting and reconciliation. Some of the customers they have are Lightspeed. That's a point of sale system. Warby Parker's glasses, Glossier, at Venue. So they're not small time at all. Let's see. Their biggest industry is their payments. All right, here they have payments for platforms and marketplaces. So if you think about how many transactions are done with like Uber and all these different marketplaces, Connect is a set of programmable APIs and tools that lets you facilitate payments on your software platform, build a marketplace, and pay out sellers or service providers globally, all while having Stripe handle payments compliance. So these companies don't have to worry about any of this stuff. They just integrate it with their app. And some of their customers in this marketplace are Lyft, Booking.com, WooCommerce, Salesforce, MindBody, GitHub, Shopify, and DoorDash. So once again, some of the biggest companies in the world. And they just make it very simple for these companies to put some complex things into place on their platform. And like this company makes so much money because it would cost these companies so much money to build all these in-house. Billing, they do subscription payments. They have billing and subscription. So subscription and invoicing for ambitious businesses. Stripe billing is the fastest way for your business to bill customers with subscriptions or invoices. Capture more revenue, support new products or business models, and accept recurring payments globally. And more things are moving to recurring payments. Subscription revenue, that is the biggest generator of money. Some of their biggest customers: Slack, Atlassian, Notion, Nextdoor, Postmates, Eero, The Atlantic, and Udacity. And they just make it super easy to integrate all of these things. Invoicing is another product they have. Let's see. They have invoicing built for speed and scale. Stripe Invoicing is a global invoicing platform built to save you time and get you paid faster. Create and send a Stripe hosted invoice in minutes. No code required. No code is like a big growth sector as well, is being able to have workers that don't have to, unfortunately be paid a lot more and be more highly skilled. They can have just more basic workers to integrate some of these things because there's no technical coding and stuff involved. And so what you're more having is like these companies that have very proficient coders that integrate these things, and then you can have like everyday people just interact with them with no coding required. Saves a lot of money. So let's see. Some of the customers are I won't go into that, but it's smaller companies, but Slack is one of them. Slack, Retool, Assembled, Ghost, Typeform, Figma, Whoop, and Divi. I haven't heard of most of those, but it just shows that they have a lot of different customers. So they have a corporate card. So this is in their the other section was payments. This is financial services. So they do like corporate business cards. They do capital and business financing. They do issuing of card creation. They do they have treasury, which is banking as a service. They do business operations. They have fraud and risk management. They have reporting and analytics, startup incorporation. So helping startups do all the paperwork and things they need to get started. They have climate integration, which is with carbon removal. And then they automate a lot of tax, like sales tax and VAT automation. So all they're going to do is just keep adding more and more features. Let's see. And I need to, I'm going to pause this for a second, and I'll be right back. All right, sorry about that. Let's see. Okay, so I was just finishing up with Stripe, and I was going to look them up on Glassdoor. I'm going to try to go through less technical stuff because it's probably not going to translate very well to a podcast. Let's see. All right, so Stripe, they let's see. There we go. All right, what's their they have a 4.1 rating on Glassdoor, 82%. They're doing all these pop-ups, right? Oh my gosh. This is frustrating. Glassdoor, I give them a bad rating. All right. So they have 4.1 stars, 82. Oh my gosh. Pop-ups have gotten out of control. Let's see. %91 approve of the CEO, and 82% recommend to a friend. I don't know why this is wanting me to review. Sorry, guys. Well, I don't know that I'll be using Glassdoor. It's wanting me to do a review of a company before I can look at any of this information. So, let me try this one more time. All right, let's see if this works now. So I mean, it has really high ratings, so it seems to be a company that people really enjoy working for. And I'm not going to be using Glassdoor anymore. All right. That's so frustrating. So I meant to search Robinhood as far as news goes and what new stuff is going on with them. So when you search Robinhood News on Google, the first one is Mark Cuban offering advice on Dogecoin and Robinhood. So kind of see what that's about. So this is his comments in terms of whether it's a good thing to do to invest in Robinhood or on Robinhood. Let's see. Mark Cuban recently spoke with the Daily Beast on a number of topics, including the Dallas Mavericks. He also talked about investing in cryptocurrency and stocks using apps like Robinhood. Cuban said you have to know why you're investing in meme cryptocurrencies and stocks. It's easy to get lost in the hype of Dogecoin, GameStop, or AMC, and I'm not saying don't invest in these companies because they can be good investments, but you've got to know why you're investing, he told the Daily Beast. Are you investing because of some video you saw on TikTok or a video you saw on YouTube or a friend told you? Those aren't good enough reasons. Part of the fun in investing is doing the homework, finding out companies and seeing if it's something you agree with and believe in. And I believe if you do any research, you will not invest in any of those things. Because most people I've talked to that are investing in those things really don't know why they're investing in those things besides the prices going up. And we all know prices go up forever. So I agree with him. I mean, yeah, I mean, I would say don't ever take financial advice from things you see. I mean, anything I say, like I tell people, like, you want to do your own research. I'm not telling you what to do. And every reputable person is going to tell you, like, do your own research, unless you're talking to a financial advisor. And that you have to pay for. If you're getting free advice, then you should fact check it and like do your own research. I mean, even me, like, I may read something wrong or like, and I don't know everything. Nobody knows everything. And at least a financial advisor, if you have like a fiduciary, they have like a shared, they're not supposed to be like selling you anything to get money off of something. They're supposed to have a shared interest in you doing well. I mean, a lot of these people online, like I've actually seen some very high quality YouTubers or people, but there's a lot of bad people too. And, there's people that are mediocre and like, I like can find little bits and stuff that are very useful, but like you never take it. You got to take everything with a grain of salt, and you've got to, I would consume a diet of all kinds of stuff so that you're thinking for yourself. Like if you're listening to me, I hope you're listening to like a lot of other people. And then you're kind of if I'm saying things that are good, you're going to hear that like multiple times, and it's going to further validate the things I'm saying. And like, I'm bad at repeating things. Like I'll repeat things, but I think that's actually a good sign that like I'm very convicted in the things I say. Like you listen to my episodes, I'm talking about the same stuff over and over because like I'll do a podcast regardless of what's in the news that week. Sometimes I'll highlight things that are in the news that week just because they're so crazy. But you always got to just like be aware. And like I've had people just be like, hey, you should buy this stock. And that's always a bad idea. And I mean, I'll catch myself being like recommending a stock to somebody, and I'll be like, you know what? Like, I mean, if you don't like feel passionate, if you don't even understand what this company does, then if you don't really understand what Tesla does, or if you don't understand like what like any of these cryptos do, you should like look into it quite a bit before you put your money into it. We all work hard for our money, and it's stupid to throw it away. So let's go back to, long way of saying that. I agree with Mark Cuban. But I do think he eggs some of that stuff on as far as like he kind of encourages some of that behavior because I think he knows it gets a lot of attention. I'll accept Dogecoin at the Mavericks or whatever. This just says the Wall Street Journal saying Robinhood and DD Chuxing, those are two big, that's a rideshare company. They're supposed to go public this year. And so there's a lot of really big IPOs that could be happening this summer. And here's another article just explaining how Robinhood makes its money, the payment for order flow that I was talking about. And not much on Robinhood itself. It's talking about some of their stocks. It says they're supposed to target their new IPO for July. But most of their heat, most of the things we've already talked about that they're facing, most of their kind of news events have been the GameStop situation and some different things. And hopefully they're cleaning up their act a lot on that. So let's pull up Stripe and see if there's any news on them. Okay, so 3 days ago in TechCrunch, payments giant Stripe launched Stripe Tax. So that's a new service where they integrate and help companies do tax services. And there's other companies that already do this. So like, if you have stocks in those kind of companies, you might be like, Stripe has been very good at what they do so far, and they could displace these companies because they don't, once this company like really has made itself have utility in an industry, it can just start branching out into different verticals and just push out all these other companies. Because if you're an owner of a business, you don't want to have all these different softwares, all these different things you have to keep track of. If you can do it all with Stripe, why wouldn't you? Why wouldn't you do that? So payments.com, that's a fintech website that's good for kind of telling you all this new news in fintech. Stripe launches global tax compliance service. That's what we were just talking about. So most of their news is highlighted around their new tax service. Wix just partnered with Stripe, and HP is set to launch Wix point of sale system. Stripe just acquired a company called Bouncer a month ago that will integrate its card authentication into the radar fraud detection tool. So they made an acquisition that's supposed to make them have a better fraud detection tool. Yeah, so most of their news is around either that acquisition of Bouncer or the tax service that they're going to have. And so you just see that they're just building up more and more things. And there was kind of a rumor that Bill, his Pershing Square, Tontine Holdings, Bill Ackman, people thought his SPAC might go public with Stripe because he was raising a massive amount of money. But it turns out he just bought a portion of, what music company was it? One of the music companies. Universal Music? I think it was Universal Music. Let's go back. The next company I know a good bit about, and it's a very interesting company, is Discord. So Discord is it's used a lot. Microsoft was just recently trying to buy it, if that shows you kind of the value of Discord. On their main page, they say, imagine a place where you can belong to a school club, a gaming group, or a worldwide art community where just you and a handful of friends can spend time together, a place that makes it easy to talk every day and hang out more often. So this has definitely benefited from like the Zooms and the different work from home stuff, but more on an entertainment and socialization basis. I first used Discord to I would just hang out and drink beers with a friend, and he said he used it for gaming a lot, and we were talking about doing some 3D printing together, and we just kind of like chatted, and what we had was we could type and talk to each other, and we could also like video chat. And I'm in these different server rooms where I can make a chat room and invite people to it, or I can join different chat rooms and become engaged in different conversation. A lot of these different cryptocurrencies have Discords where you can become a part of the community, and that's really like some of these that are really decentralized. That's the only sort of organization they have as a Discord, which is really cool, actually. So you can create an invite-only place. So only the people that you invite can come in and chat. Discord servers are organized into topic-based channels where you can collaborate, share, and just talk about the day without clogging up a group chat. There's voice channels. I know they did their own version of Clubhouse. It says grab a seat in a voice channel where you're free. When you're free, friends in your server can see you're around and instantly pop in to talk without having to call. there's been some phenomenal communications companies that have really emerged this past year, with Zoom really taking off and Discord getting bigger, and I guess Slack getting bought by Salesforce, and it just seems like you got Clubhouse coming out, and it's just communication is just kind of going into the stratosphere. You can get any community running with moderation tools and custom members access, give members special powers, set up private channels, and more. So I've heard only good things about this program. People that use it seem to really love it. And then they do have a paid program. So this is like free, but Nitro, I think it's Nitro, is the paid version, and you get some extra features. And I forgot what those are, but they'll probably start trying to push people to be more on a paid tier at some point. But let me see if there's some news on Discord. Let's see what the newest information is. Apparently they're in the Epic Games Store. That's who does Fortnite. I don't see anything big of note. They changed their logo, font, and color. That's not very big news. Sony's PlayStation is going to integrate Discord chat for gamers. That's pretty cool. So, I mean, obviously PlayStation is really big user base, so that's really cool. It says this is an article on how Discord unites podcasters, creators, and isolated students. There was a Cloudflare network outage that disrupted Discord and Shopify, but that's not really super bad for Discord. That's bad for Cloudflare, and seeing that a company like Shopify got disrupted too. Like, I'm sure Shopify does the best it can, so that's not negative news for Discord. Yeah, so like I said, Discord, Microsoft tried to buy them out for a good bit of money. I forgot how much. And Discord claims 150 million active users per month. And doesn't make money from advertising, which is awesome because that means they're probably less destructive. I do think advertising creates toxic communities, so that actually is a really big plus for Discord. I think that's why Facebook is so toxic, is the advertising model. Discord doesn't have incentive to just put all this crap in front of you. And, I hope even if they needed to charge fees more, I hope people would pay it, because I don't want them to go to an advertised model, because I think that creates toxic communities. I'm more bullish on Twitter, as I think they've said they're moving to some sort of subscription revenue business model. Now it says the Discord CEO, when he's talking about the Microsoft bid, we did receive a lot of offers. So as you can see, this is very much a industry that's in demand. And obviously, I don't know whether this company can exist as it is as a standalone. Is it a feature, or is it, can they keep this up, or are they going to have to get swallowed up by a company? I really hope they can keep it up. I hope they can make money. I hope people will pay it, because I don't want them to get bought up by anyone. And I don't think Microsoft was really one of the only big tech companies, and I mean big tech like Amazon, Microsoft, Apple, Facebook, Google, that there's companies maybe a tier down that could definitely purchase them. But the big tech companies, for some reason, Microsoft, which I think is really fishy why Microsoft isn't being investigated for antitrust, but all the other companies, I don't think they can make an acquisition like this. without getting some serious scrutiny. So, but they definitely have lots of people that want it, but I hope it can stay a standalone company. I want them to make a lot of money, and I'd love to own Discord stock. Let's see. They made a feature that is like Clubhouse on Discord. They were one of the many ones that kind of cloned Clubhouse to do a feature they wanted. Yeah, it says Discord highlights debut of social audio event guide stage. And I don't know how they're going to do this exactly. All right, so I'm going to try to move a little faster on some of these because I do not have time to cover them in the depth. But, I covered some of the biggest ones a lot in depth. So those are I just covered like 3 of the biggest disruptors according to the list. This next one is called SentinelOne, and they have a platform that does cybersecurity stuff. Some of their products are, let's see. Oh, hold up 1 second. All right. So they have, this will probably be really dense to understand. Most people don't understand cybersecurity, but they know how important it is. And so they do have a comparison where it says some of their competitors. Let me go back to this. Who are some of the companies to compare SentinelOne to? One of the biggest things I think we can take from this is it says the end of ransomware. They take on a lot of things like malware, ransomware, and we know ransomware is a big deal because that pipeline near me on the East Coast got shut down because of some group called Be Evil or something like that, hacking the pipeline and finding vulnerabilities, and there's lines at the gas pumps and all kinds of crazy stuff. And so what these companies are getting is like, hey, we're gonna steal your information or shut things down at your company until you pay us in like cryptocurrencies. And they're paying it to get things back online. Apple had one of these attacks too. So they're stealing things and asking for a ransom. So here's the different sectors they're in. They do real-time endpoint protection. Now what that is, there's not, all cybersecurity is not the same. There are so many different types, and maybe one company does a certain type, another company, and some companies may try to do everything in one. So endpoint protection, multiple patented AI algorithms protect against the widest array of threat vectors, eliminate dependency on connectivity, cloud latency, and human intervention. On-device AI prevents known and unknown threats in real time. Okay, so what I think endpoint is if you have like more and more workers maybe working from home, I think it's just like, or even in the office, I think it's like things on your, like, that you do maybe with passwords and things that are creating vulnerabilities. Like for every additional device, it creates more and more vulnerabilities. And like as things are going like Internet of Things, like your house has gone probably from having like 1 to 3 connected devices to tons. And so now you got to connect all these. You've got all these more attack vectors, and there's more endpoints to protect. So you need something that monitors all these things and make sure they're not getting hacked. Maybe a camera at your house. But a lot of these kind of things are more like company size than maybe what you use at your house. So just because I'm kind of using it as an example, like devices at your house, this is more probably for companies. There's detection response. Devices self-defend and heal themselves by stopping processes, quarantining, remediating, and even rolling back events to surgically keep endpoints in a perpetually clean state. Um, it monitors IoT devices. That's all those little different devices around your house or around a company. Just everything that's connected to the Internet of Things, and cloud security. Um, and so, I mean, we all know this is like super important stuff, but I think the big thing is like, do they have an advantage over other companies? Like what makes this company special? And to be on this disruptor list, like they must have, some potential to be disruptive to other companies and take market share from them. They have some comparisons that you can look up. They have a comparison of SentinelOne versus CrowdStrike. That's a company I'm personally invested in. SentinelOne versus Microsoft, obviously enormous company. I like being involved in smaller, more growth stock oriented. Microsoft's not as much a growth stock, and they have so many other things besides cybersecurity. But SentinelOne versus Microsoft, SentinelOne versus McAfee, SentinelOne versus Symantec. So they have comparisons on their site versus some of, as they've laid out, these are our competitors. So here's why we're better than them. But I'm going to move on. Let's see what news they have real quick. Sentinel. One. All right. They might have some action lately with all this stuff that's been happening in the world of cybersecurity. So here's a good tidbit. SentinelOne considers CrowdStrike, CRWD is the ticker for them, to be their main competitor. My favorite cybersecurity stocks right now have been CrowdStrike and I don't know, my brain's blanking on the other one. But they consider CrowdStrike to be their main competitor, so that gives you some clue as to what they do. Actually, I'm going to pull this article up because this should give you a good breakdown of what they do. Let's see. All right. So that gives you some clue as to what they do. Both of these companies offer distributed AI models that run locally on every endpoint and then cloud for every cloud workload to watch out for bad things. Here we go. I was kind of trying to explain an endpoint. An endpoint simply refers to a computer, laptop, or any other device that is at the end of a company's IT infrastructure. So this is company focused. Here's the top half of the Gartner 2021 Magic Quadrant for Endpoint Protection Platforms, which shows Microsoft and CrowdStrike as two leaders dueling it out, while SentinelOne watches from below. So in a Gartner report, they actually have SentinelOne rated below CrowdStrike and Microsoft. So, it's good to look at independent research by other firms to see, because of course SentinelOne on their website is going to say that they're the best or why they're on track to be the best. But they're below Microsoft, CrowdStrike, and Trend Micro, and there's a chart showing this. It shows them above McAfee and Sophos. So yeah, there's definitely some good research platforms. Gartner is a good one to evaluate these different softwares against each other. But cybersecurity is not my expert area. So, I mean, you get into some very dense stuff, and a lot of investors fall prey to, just kind of washing it with some fancy words and, and not really fully getting an understanding of what they do. This company, DD Chuxing, is one of Uber's biggest competitors. It's a Chinese vehicle for hire company quartered in Beijing with over 550 million users and tens of millions of drivers. So essentially like an Uber of China. I'm not going to focus on them a lot because, I don't know, I'm personally not going to be buying them. They are doing an acquisition of Uber China. So they pretty much beat out Uber in like certain areas of the world to the point where Uber just like sold off portions of their business to them. Let's see. So they have lots of services, though. They have a lot more services than Uber does, which, is more interesting. But who knows, like, how profitable they really are, because you don't know with some of these Chinese companies. The metrics can be all screwed up, and they can maybe get a lot of government money. But they serve 550 million users across 400 cities with products, including, I'll get to this actually. So their services include taxi, launched in 2012. The service includes intelligent request dispatching system for taxi companies to enhance driver efficiency and user experience. Didi currently partners with more than 500 taxi companies in China, Japan, and Brazil. So, whoa, this sounds like they actually partner with taxis, which Uber didn't even try to partner with taxis. They just got rid of it. They just displaced most of the taxis. Didi Express, launched in 2015. The service matches riders traveling in the same direction with an available shared car. Didi Express Pool carries over 2.4 million daily rides in 2018. So that's more like a carpool, so like just logistics matching people with a rider. Didi Express launched in May 2015. Sorry, I already said that. Didi Premier launched in 2014 and rebranded in 2018. The service includes a 24/7 customer service hotline in Chinese and English and special services, and includes premier vehicles equipped with child seats, adapted vehicles for riders with disabilities, and special arrangements for guide dogs. So this is obviously like way more in depth than Uber. I'm just reading through this, and I can tell they do a lot more than Uber. Designated driving, the launched in 2015. The service lets customers who own a vehicle request a chauffeur to drive them. Enterprise solution, the service offers business travel services to about 170,000 corporate clients. Bus, launched initially in Beijing. The platform offers a wide range of products and systems, including real-time minibus pooling service, customized bus services, data-based intelligent bus dispatching service, and real-time bus service inquiry service. In 2018, Didi launched an intermodal transportation recommendation function, allowing users to search and book public transportation, online car hailing, and bike sharing services in a single smartphone screen. And this is one thing in Asia that they do a lot more than here, is these super apps. We don't actually have super apps, but there's all these different things within one app. Lux, the service offers professional chauffeurs and mid to high-end premium luxury cars. They do bike sharing, which we know what that is. Mostly e-bikes, maybe some non-e-bikes. Zhaozhou Automobile Solutions. They provide various auto-related services, including leasing and trading, refueling and recharging, maintenance, repair, and car sharing services to Didi drivers and independent car owners. So this is big over there. Financial services. Didi announced the launch of a new line of financial services such as car insurance, personal loans, and crowdfunded medical insurance, available through a separate Didi Finance app. Well, Uber's in a lot of these things except for finance. They do their own like integrations, but as far as like car insurance, personal loans, and medical insurance, not so much that. Didi Food. Food is Foodie is Didi's food delivery service. It's available in Mexico, Brazil, and China. So these guys are in a lot of different countries besides China. Didi English, they released an English language service in the Chinese mainland. The service offers English language user interface and a real-time in-app instant text message translation to facilitate rider-driver communication. Some of the technologies they have invested in is artificial intelligence, big data operation, and smart transportation. So, I mean, they definitely fit into the disruption space with some of the things they're invested in. And they've grown much bigger than Uber has. Let's see. But I'm not going to really focus much more on them. This next one is called Brex. And it's all-in-one finance for different businesses. You can get a deposit account, credit card, and spend management software in one easy solution. Some of the companies that use it are Y Combinator, Airbnb, Carta, ClassPass, Flexport, and Untuckit. So let's see. They have some of the services they offer. They have a business account. You can deposit funds and send free wires, a credit card that you can earn up to 8 times points on all spending, instant payouts, get early access to online revenue, rewards, save with rewards and discounts. They have expense tracking where you can issue cards, match receipts, and run reports. Integrations, you can sync and close the books faster. Bill pay, you can automate the invoice and payment process. Spend controls, you can set up spend policies with approvals and alerts. Now, I will say, this is one of those industries where there's so many people, like I'm reading different services. Like I can tell you a lot of companies that have some of these different services. So this is a very crowded space. I mean, they have some really good customers, but it's definitely not one of those spaces. Like, I feel like when I invest with Airbnb, there's like some other companies like Vrbo trying to come in there and do what they do, but I don't feel like it's a company that is just going to be thrown, just going to be cast out like immediately. I feel like they have a really good moat, and some of these companies, I have to wonder what their moat is, because maybe this is the winner. This company might be the best one, but like I know a lot of software companies that do bill pay. I know a lot of software companies that do expense tracking, and it's like, okay, somebody's going to lose there, and it seems really hard to guess who's going to win all of these things. So I think the business software space, business software as a service and cloud space is, I mean, there's super high margins, but it's very hard to guess who's going to win these things because there's so many. The bar to entry is lower because it's like you just need some good coding, and I feel like, some of the strongest business models are platform, marketplace, where it's kind of like winner takes all. And once you reach a certain scale, it's just like hard as hell to compete with them. Like Amazon's marketplace or YouTube is a marketplace. It's really hard to compete with some of these platforms. Shopify is one of those. Spotify is one of those. Roku is one of those. But it's really easy to compete. And I say easy, like not like I could just go start a software as a service, but I'm saying there's a much lower bar for entry to a lot of these software as a service companies. And I mean, you're constantly seeing somebody maybe create a better product over and over and over. Like it's a constant battle. And another area that's probably more easily defensible is something that requires a lot of hardware investment. which, I mean, I guess the easiest one to think about is legal monopolies, which are like utilities, that they've invested all this infrastructure, whether it's cell towers or power lines, rails, water. A newer one is data center. And like, I think cloud is something like cloud companies that there's such a difference between companies that operate on the cloud, like this is software as a service, and then companies that have, there's three different areas to invest in cloud, as I've had a podcast about. There's platform as a service, infrastructure as a service, platform as a service, and software as a service. And in that order, you're going to make the most money if you make the right pick in investing in a software as a service, because they can go from 0 to 60 the fastest. And they can go from like a little tiny company to like very quickly. But your more steady eddies or your infrastructure as a service, which is like Amazon Web Services or DigitalOcean or some of these REITs, all these different that have like the hardware of the cloud servers, and just all the pipes and infrastructure, which some of these like Amazon plays in all three spaces. But investing in, like, you're going to be the most secure in those, the infrastructure as a service plays, Azure from Microsoft or Google Cloud. I think stuff like Fastly is kind of infrastructure, and some of these Cloudflare. No, Cloudflare. I had a brain fart. Then you have the platform as a service. I have to look up what some of those are. And sales, I think Salesforce is in that one too, in the platform as a service. But it's more risky than infrastructure as a service. But it's not as risky as some of these software as a service. But there's higher levels of complexity. It's the highest level of complexity to be in the infrastructure as a service requires lots of capital and infrastructure, obviously. And then the platform as a service requires a good bit of infrastructure, maybe just digital, but it has pretty big moats and requires a lot more work. And then the software as a service, people can just create these apps that do these things. And that's the highest competitiveness. And so, even though this is in the Disruptor 50, like, doesn't mean it's going to be the one that wins out, but it could be something interesting to put on your watch list. But this is a space you really need to understand why you are investing in it, because you need to know why it might have some competitive advantages over another company. So we can look up their news real quick. Oh, this is gonna be a long podcast. Maybe I just talk too much. Says CNBC. It says Brex now offers a software platform for businesses to manage their finances and credit lines. Brex added crypto to its credit card rewards program. Everybody's doing that just because it's a cool thing to do. That's what all the cool kids are doing. You can now, with Brex, you can now redeem points for crypto. For every 1,000 Brex points it says, but you may not want to. For every 1,000 Brex points you redeem, you'll receive $7 of either Bitcoin or Ethereum. Wait, what does it say? In other words, I feel like, I think she's saying some of these things aren't that good of a deal. In other words, you'll receive just 0.7 cents per Brex point towards crypto. So a lot of this is I'm gonna coin a term, and if it gets famous, I want some money. Crypto washing. It's like greenwashing, but crypto washing. where you have a struggling idea, just slap crypto on it, and you kind of had that with what is it, 2017? Everybody was like something crypto, something blockchain. You had Long Island Iced Tea change their name to Long Island Blockchain because apparently that makes your stock go up exponentially, is to add crypto to it. I like crypto, but there's some stupid stuff that happens. And there's some money grabbing, some greedy fingers. They participate in an $8.75 million seed round for Kodo, India's fastest growing corporate card startup. So they're investing in India, which obviously has a lot of growth potential. Brex adds business MasterCard for tech startups. Technology startups using the Brex credit card for business expenses will soon migrate to the World Elite MasterCard for business. Huh. Well, yeah, I don't really see anything else. I think this is a very highly competitive space. This Brex company could be something to put on your radar. I don't know if they're going public anytime soon. This company they're coming public via SPAC, and I actually bought some the other day. No, they're already public. Yes, they're already public. I think they were direct listing. So they're on Cash App right now. I bought some. It's called Marqeta. They are the world's first modern card issuing platform. And I have used their cards with DoorDash and Uber and Instacart. They make cards for Affirm and Klarna. Those like kind of delayed payment programs. They make the cards for Cash App, which I have, which actually I had my name engraved on it. Engraved in my card, it says Mike Satoshi. And it has a Bitcoin symbol on the card. It's sweet. I get compliments all the time when I use it. So less people make cards. It's cool. So what is their platform? It's good. Platform overview. I was not even aware of this company until I track all the new IPOs each week, and I'll do a thing on that. But yeah, there's some new IPOs out, and this was one of them, delving into what they do. They do card issuing. They issue physical or virtual cards. Tokenization? That makes it sound crypto, but I don't think they mean crypto. Card management and fulfillment, processing and settlement, authentication and 3DS, just-in-time funding. So they do like cards. So with like DoorDash and Uber and stuff, they do not want like open cards that someone could go just like buy whatever they want with. So essentially these are like prepaid cards. And that's what a Cash App card is. I was kind of like wondering how that works. And literally my Cash App card doesn't have money on it until I kind of like move it in Cash App, and it works like a prepaid card. And that's exactly how DoorDash's cards work. Is like you get the order, and a certain amount of money is added to that card right at that time. So it's not just an open credit card. I used to think, oh, they're just literally like putting all these cards out there, and like people can just spend what they want on them. But no, they're prepaid cards, and maybe I just don't know much about. I didn't know much about fintech, so maybe you guys knew that already. But so just-in-time funding, meaning that the funding is added to the cards right before it's needed, and that's obviously super useful for gig economy and some of these different types of very dynamic cards that need to be more dynamic than just a basic debit or credit card. And stuff like Affirm and all these are a lot more complex cards. There's the dynamic spend controls. They have applications with developer tools, risk and fraud. They have open APIs. It's just kind of automated code that has customizable card experiences, so companies can just make all these different use cases for what they need for their cards to do. Visibility and transparency, so you can have like controls and like know what all your cards are doing. Integration with other apps. Card lifestyle management dashboard, data insights and reporting, and case management. Cloud infrastructure, it's scalable, reliable, and secure. Let's see, solutions. Their key products, they do prepaid cards, debit cards, and credit cards. They do their solutions. Okay, so by industry, they handle digital banking, incentives and rewards, online travel, small business lending, on-demand services, expense management, media and ad agencies, point-of-sale financing, insurance, and retail marketplaces. So, I mean, this isn't like craziest concept, but it's something that's very valuable to a lot of businesses, especially as it goes into like the gig economy. And so this is a very essential business. I don't know how many other people do this, but I mean, it doesn't seem like it's probably got the biggest moats, but if they're an early mover, this like they could have an advantage. Let's see, they've got a lot of deals with some of the biggest companies, but I mean, there's probably a lot of room for multiple people to be in the space, but this probably is a highly competitive space. Let me look up some news for them real quick. They just came public, so we'll probably talk about their Marqeta. I wouldn't say it's the most defensible business in the world. Marqeta, this is from the Wall Street Journal, one of the forces behind the rapid evolution of payments and commerce, is now a public company. Marqeta's valuation is wildly optimistic. That's from Seeking Alpha. Marqeta's intrinsic value is $9 per share, significantly below its present valuation. This implies that in the long term, so they're saying they don't think the company is worth what it is right now. Yahoo Finance, Marqeta riding the fintech wave. Shares rose by 13% on the first day. So it says it's just kind of riding the wave of fintech companies. CNBC, Marqeta closes up 13%, topping $16 billion market cap in its debut under this ticker symbol MQ. Marqeta IPO, this is from the Financial Times, puts spotlight on fintech fees. Marqeta, a debit card company that gets most of its business through Square. Okay, so Square is one of its biggest vendors. Let's see. Can't read that article. So that's interesting. Square is one of its biggest vendors, or biggest customers. It raised $1.23 billion in IPO. So most of the news is just based off of how it performed, which doesn't really matter to me in the short term. A lot of these IPOs are getting way overpriced on their way in. So I mean, that's not really surprising at all. Like I said, probably a very competitive area. So it's worth just kind of probably just watching them. I mean, I got a little bit of it because I see a lot of value in what they do, but it's worth kind of watching them and see how they perform in the long run. The next one is called Chime, and I can speak a lot to that because I use Chime Bank, and it is so much easier to use than Wells Fargo, who I used to use, and it's an online bank. They don't have a physical branch. Um, they are probably able to save a ton of money. They are good at what they do. I do not believe they have a banking charter, meaning they are like a fintech layer, and then they send it down and go through another bank. They have a bank like backing them up. I have a card through them. Their app is so easy to use. I used to mess around with Wells Fargo's, and I can tell you, Chime doesn't hit you with overdraft fees. It actually can it will loan you up to like $100 if you go over. You just pay it back, like when you get paid again or whatever. But you don't get charged fees. They have lots of different tools on there to help you save money. Like you can get like 10% taken out of each paycheck and put into savings. You have your checking and your savings like just right on top of each other within the app. And it's a checking and savings account, and they have a setting for like acorns. Like when you use your card, buy a $250 coffee, 50 cents can get rounded up to be put in an investment account. Chime has this with savings, so like your money just gets put in savings, and I use that. I don't use acorns, but I like to control what I'm putting into my stocks and retirement, all that kind of stuff. But with Chime, I do want to automate some money going into savings because I like to put more money into investing than I put into savings, and I kind of need a way to force myself to do that. Some of the features that they have, you can get paid early. You get paid before everyone else. I don't know how they do that, but they have online banking, so you don't have to go to branches. And ATMs, you ask, like, how do you do that? I can look up a map on their app, and I can go in and use ATMs fee-free. ATM, and I can actually deposit cash through like participating stores, like grocery stores and gas stations and stuff like that. So you can get money in, you can get money out. Putting cash, I think you have to pay a fee to deposit cash, but you get the money out through fee-free ATMs. I don't deposit cash really in there. I just have direct deposit connected. I don't even mess with cash anymore hardly. Yeah, I don't really fool with that. So I don't really know how efficiently that works. I've done it a few times. I think I did pay a fee. Like I deposited some cash at 7-Eleven. But it just shows how much I don't touch cash anymore. Fee-free overdraft, no hidden fees, mobile banking, automatic savings, mobile payments, and security and control. They have like a peer-to-peer, and I don't think they even have to be part of the network of Chime that you can like send money via the phone and kind of do like a Cash App sort of thing, which is really cool. I love that bank. It's awesome. I've never liked a bank until Chime. It just works really well. Don't have any issues with it. It's used by the. Is it used by? It's covered by covered by the Wall Street Journal, Forbes, New York Times, USA Today, and TechCrunch. Yeah, it's. I mean, I think I gave a good rundown of it without even. I love when I can just talk about it without having to read the website at all. Let's see if there's any news real quick on them. I can tell you everything I need to about that bank and I have talked to lots of people about. I've run into other people. I was so sick of Wells Fargo, and then just being a pain in the ass. And I still have a credit card through them, but I just use Chime for everything else. I also use SoFi. SoFi is a publicly traded stock now that Chamath Palihapitiya took public, and they're pretty good. But I don't like you can use them as a bank, but I don't do that because I really like Chime services. That I like. There's something to be said for a company just focusing on like a core thing, and like Wells Fargo isn't focused on your checking account, your savings account. They're focused on all the things that make them serious money, and these big banks, they just want your money, but they don't care about making service to the customer that great, which they should. But I don't feel like they do. I don't feel like they like make the user interface, and they're just like not native. I like these tech companies doing this fintech because somebody like Wells they're used to handling money, and they're they handle money, and they're actually being just kind of like demoted to being commodities essentially. Like I don't think banks will go away like completely, but I think they're just going to be relegated to a more irrelevant kind of like they're not going to be able to get these crazy fees and all this stuff. They're just going to be like a base layer. You know how I talked about cloud? You have like infrastructure as a service, platform as a service, and software as a service. Software as a service is like the shiny stuff on the surface that you interact with. And then platform as a service is kind of a platform that brings all the shiny stuff together. And infrastructure as a service is the stuff you don't even see that makes it all work. And the banks are just going to be relegated to that, which isn't a terrible place to be in, but like there's no reason for them to be on the surface. The fintech layers are going to be on the surface, extracting a lot of the margin probably. So they have a lot more leverage against the banks. I don't know. If they're battling each other, then consumer wins, I think, in that circumstance. So that's actually a place where you want more, like a lot more competition. And I'm sure the banks don't love the fintech companies, but they don't really have a choice. They have to cooperate with them. Apple Pay, Google Pay, they're really like squeezing the banks. I wouldn't want to be in banking. But I mean, most of these don't have a banking charter. Most of these companies do not. Like Apple does not have a banking charter. So they might be seen as I don't think they want to fool with that because you get a lot more regulation too. Or they might get antitrust scrutiny. So I think a lot of these people just don't even want to fool with it. I could see Jack Dorsey maybe want to do it with Square, and I don't know, he may research it and say that's more trouble than it's worth. I know SoFi is looking to get one, and if they get one, that's a better bank, because I think they do a good job. Let's see. Whoa. Okay. I'm getting stuff about telescopes. I'm typing Chime Bank. I'm not researching a telescope. The Department of Financial Protection and Innovation of California entered a settlement agreement with Chime Financial. Huh. What's this? This is saying something about they can't claim it as a bank. Chime Financial cannot claim it as a bank. Okay. Entered a settlement agreement with Chime Financial. a neobank company that is not licensed to operate as a bank or otherwise exempt from licensure, but works with banking partners to ensue consumer banking products. The DFPI found stupid pop-up. Oh my gosh. These pop-ups are terrible. DFPI found that Chime potentially violated California Financial Code, blah, 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 using the website chimebank.com and using the word bank and banking in certain other aspects of its business. It sounds like semantics. It sounds like they use the wrong word, which is stupid. As part of the settlement, Chime will stop using the website Chime Bank in its business unless and until it becomes a licensed bank. Moreover, Chime is required to perform a review of its webpage and advertising to further clarify any references where the term banking is used, bolster its description of its role as a technology business processor and marketing service provider to its bank partners. It is required to make any such disclosure in bold and or increased font size and in close proximity to the banking terminology. This sounds like it just sounds like technicalities. I mean, they might have used the term bank because it would get them more trust in business, which is kind of maybe a little slimy. The banks also are just being buttholes because they don't like these companies kind of operating like that, so they might have raised something to argue that they're using the term bank. I wouldn't think this is like anything big against the company. It's just some terminology. It's kind of like the stuff if you followed any of the alternative meat and milk and stuff like that. They are fighting. Big agriculture is fighting the term almond milk. They don't think they should even be able to use the term milk, which is ridiculous. I think the dairy organization thinks that's going to hurt almond and cashew, and it probably will. And it's ridiculous that they can't use those terms. I don't think that'll go through. But they're also fighting Beyond Meat and Impossible Meat being in the meat section. And using the term meat, so like milk and meat, like they're trying to say milk has to be from the animals, and meat has to mean that it's from the animal, and that they're trying to fight the Impossible Meats and the Beyond Meat being in the meat section, and the alternatives to dairy being in the dairy section, which, I mean, makes sense why you would have the alternatives right next to the dairy section, but yeah, of course it's going to hurt the sales of meat alternatives and dairy alternatives, which helps the meat industry and the dairy industry. So I feel like this is the same thing. It's just kind of like arguing over terminology, but I mean, it is what it is. You have to respect that. That just sounds like something they just have to take down. It says, whoa, Chime is the #1 neobank in the U.S. So neobank meaning not actual bank. So they're #1 1 week ago from eMarketer. Why the Chime IPO is scaring all the big banks. That actually sounds interesting. So Chime is having an IPO. Let's see. I would love to invest in them. Let's see. I'll read this article real quick. How much do you enjoy spending a lunch break in line at the bank? Well, in the future, you won't have to. A little company called Chime came to solve that problem, and we could get a Chime IPO as early as this year. Owning this stock will be a play on the future of banking. Really, that's how big the stakes are right now. Banks are starting to look less like a big walled fortress and more like little friends that fit in your pocket. All mobile banking will disrupt more than you think too. We're not saying it will totally disappear. Massive corporations like Bank of America and Wells Fargo, but it sure as heck will give them a run for their money. Chime stock will be one of the first to benefit. Here's all you need to know between now and when the Chime IPO comes. What is Chime? Chime is a mobile banking platform delivering banking services for Bancorp and Central National to the palm of your hand. It was founded in San Francisco in 2014 with a public launch on the Dr. Phil show. Interesting. This is one of the first and finest banks without any brick and mortar locations. Mobile-only operations give neobanks like Chime an advantage over those clunky institutions since they don't have to pay as much in rental or upkeep costs. As a result, they can afford to offer higher-yielding savings accounts than your traditional bank of choice. That helps attract customers as well. The company has become popular with younger, more tech-savvy crowds, especially since acquiring Pinch in 2018. I didn't know they bought that company. Pinch was an app that made it easier for millennials to report on-time rent payments and improve their credit scores. As of 2019, the company is partners with the Dallas Mavericks, so it could be safe to say that the Mavs owner and Shark Tank star Mark Cuban likes Chime. In a 2020 press conference, Cuban said that he has always worked to introduce technologies that help people get ahead. He said Chime is as emblematic of that as you can possibly find. This seems like a company that actually has a moat. Whereas I was talking about some of the other companies having questionable moats, I think this company has a moat and it's the biggest. It's not easy to become competitive with the banks, and they've got a lot going for it. They've got some big sponsors from celebrities like Easy Marketing. They've got people that really love the interface of it and really like using it. I like using the interface of it, and it's been awesome. How Chime is doing so far. Chime really is one of the most interesting fintech companies on the market right now, and it's got the funding to show for it. It's raised $3.8 million around when the company was founded. Within the same decade, it raised more each year until making $700 million in 2019. That kind of institutional interest is a reason to be excited about a company, and Mark Cuban's stamp represents an added plus. Let's see. According to Tipalti, 60% of banking customers want to use an app to transact with their bank. That means there is plenty more ground to cover for this company as it scales. Today, especially while we come out of a pandemic, people have gone out of their way to avoid physical contact with others. Like many of the trends that are not restricted to the pandemic alone, this will most likely linger in some way. For example, we talked about how remote work increased during the pandemic. Over 20% of people teleworking during the pandemic still plan to do so. That's not because they're now suddenly hypochondriacs. It's because remote work was already inherently desirable for many people to begin with. Likewise, the convenience of mobile banking solutions will carry on well beyond COVID-19. As this company plans an IPO sometime in the late 2021, here's what you should know about Chime stock. Should you buy it? Right now, Chime is growing. It serves over 8 million customers today. 8 million is a good bit. That's about 250 million people in the United States. So it's a good bit. By all other indications, Chime appears to be taking off in the great fintech wave projected to swell in the next few years. I honestly think of the ones I've discussed so far, Stripe and Chime are the best of these two. Like, Robinhood's got a lot of competition. It's number one, though, on this disruptors list. It's got a lot of competition, trust me. especially from crypto, and Cash App, and a company called Public and SoFi. They're not the only ones doing that, and they're even getting caught. Like Fidelity and some of those companies are catching back up to them. They've started some of the same stuff. So just because it's higher on the list for CNBC, I wouldn't say that means it's the best company. CNBC definitely talks about Robinhood a lot more than any of these other companies, so there's probably some level of bias to that. Gen Z stands as one of the most technocratic generations yet, with 64% claiming to be constantly online and 54% saying they feel insecure without their smartphones. This is another big thing. Just because, millennials, I think of millennials as like a hybrid generation. A lot of millennials kind of like know before the internet, they know after the internet. A lot of people much older than millennials are just kind of like, what's going on with all this stuff? Like scratching their head like, this is crazy. I'm perfectly happy with Wells Fargo. I'm perfectly happy with Bank of America. I'll go to a bank or use the ATM and I grew up going to banks, but I feel like my age can see this is the way it's gonna be. And we're quick to still adapt, or I think your brain, if you don't keep it very active, it can get rigid over time. And I think definitely as millennials, we're still nimble, and we realize that we're in this world now where we have to pivot to new things. We know the new reality, which is my grandfather worked about the same job. He was in the Air Force and worked at Western Union. He worked the same job like most of his adult life. My dad, he didn't have that many jobs. Maybe he had 6 jobs or something like that. Less so, and they were very reliable, health insurance, all this stuff. Our generation has kind of bounced around a lot more, and there's more gig work in corporate. There's all this stuff, and some of your skills might be out of date so quickly. We're facing a world where it doesn't make sense to go to school maybe for all these years to learn one thing and get out and just know that you're going to have that job for the rest of your life. And there's going to be more reskilling and educating yourself constantly throughout life. And I also tell people you have to be prepared to constantly learn stuff. I didn't study any of this financial stuff in school. I've studied so many different things, and I studied renewable energy, worked in that, did building efficiency and performance, and I've had to make different pivots. I'm in agriculture right now, and I do this on the side because I love it, and I want to be in control of my future as far as investing goes. I want to know that when I get older, I'm not going to be relying on Social Security. It may not exist when I get older, and I want to feel like I am in control, and stocks allow me to have that feeling. And we live in one of the best times to really take advantage of some of these crazy exponential upturns. People just don't understand how much is changing, or how much some of the pieces are being put in. They feel like things are changing slow, but they don't understand all the pieces that are being put on the board. The internet, the foundation took a long time to be laid for the infrastructure, and then suddenly, the internet looks like it wouldn't even be much of a thing in 1999. You had all these companies, but it wasn't at scale yet. It wasn't ready to handle e-commerce, and people were trying to do e-commerce in 1999. But it took years to lay all the foundations for it, and suddenly now we're reaping what's been sowed. And the crazy thing is, a lot of that foundation that was laid in the late 90s Now we don't need a lot of that infrastructure anymore. We don't need like all new infrastructure for like everything, for blockchain, or maybe 5G. We need some, but we don't need all new infrastructure. So you can have a faster scaling effect, and you just got to add a few more things, a few more technologies, and so it's going to move a lot faster than even like the internet hitting scale. So you're seeing the internet start to mature. We're only seeing it start to mature, and then now you're seeing, okay, once we have a mature internet, now we have all these other new technologies that are building on top of that. And you're seeing boom, 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 and things are going to change so fast, and people's heads are going to spin. And you got these younger kids though, like all they know is, and it's kind of a little sad to me because I want people to be outside more, but like all they know is just these technologies, and they know how to use these devices better than I do, and it's like it's mind blowing. I mean, they're gonna have an understanding of these new banks and the way we're investing right now. Like you've got all these people still plowing all their money into Bank of America, Wells Fargo, JP Morgan, all this, just because a lot of people still use it. But the majority of the demographics that have all the money, yes, they're still using it. It's starting to shift. And as millennials are hitting scale in the earning era, and then you start having the retirement of a lot of the baby boomers and all that, suddenly this is going to become the norm. And like I said, some of these banks are being relegated to commodities. And the younger generation below me, they're not even going to know any different. And that's how you have a cultural shift. It's like my generation is going to actively make that transition. That's what I said, hybrid. We're going to actively make that transition. And the younger generation isn't going to know why they're doing it. They're going to actively make a new transition. Who knows? Maybe they'll just go to complete crypto or brain banking. I don't know, like through Neuralink or something. But we'll probably make some transition off of normal banking to more of this fintech banking, and then I can't even predict where it'll go from there. So I think this is a good company. Oh my god! And there's no way I'm gonna get to all of these, so I'm gonna do probably another one just to keep talking about some of these because these are so interesting. Some of these companies, and even if it's not. Say these companies don't even come public as public companies, it's worth the discussion of the sectors these are in, because these are seen as like this whole podcast about disruptive technology, and these are seen as some of the most disruptive sectors right now, and so that's worth paying attention to. And so I'm just going to keep focusing on a lot of this stuff because this is kind of like what I do. This is important stuff. So thank you for those of you guys that are listening. And I will make another one to dig deeper on this. I mean, I could go a lot faster, I guess, but I like digging deep on stuff and, talk about as much as possible. So give me feedback. Let me know if I'm talking about it too much or if I should move faster through it. But I want people to make good decisions. I'd rather cover it more in depth and really like have an understanding of what these companies do, because CNBC made this thing and news, they give you, what is it? They give you like the fluff. They skim the top. Jim Cramer will yell like 50 different stocks you should buy within one episode. I'd rather spend, now we're going on 2 hours talking about like 5 companies and really have an understanding of what they do. And maybe we learned a lot about the industry as a whole in the process. So thanks for listening. And I'll upload this as a podcast. Once again, I have a Twitter account, Mike Satoshi4. You can follow me. And I will be hopefully uploading that chart that I did of the different sectors. I'll upload that in the newsletter, the email newsletter. So if you haven't signed up, sign up for the email newsletter. You can find it on my Twitter. It's through review. You should be able to sign up on there. I'll try to post a link in the podcast or the stream as well. And check out the podcast as well. Thanks. Bye.